We'll have now a presentation on how the Financial Control Unit product review helps to enhance investor protection. Please join me to welcome Financial Control Unit of CMA with Yasmine, Fakhoury and Racha Chehab.
Hello, thank you for joining us today. My name is Racha Saadeh Chehab, and I'll be presenting alongside my colleague, Ms. Yasmine Fakhoury, this next section. Yasmine and myself, we work at the Financial Control Unit, the FCU, at the CMA, which has been empowered by Law 161 to regulate and supervise the financial markets. As said earlier, our presentation will cover how the FCU's product review enhances protection of the investor. It will be around 45 minutes and followed by a Q&A session. We will be touching on various components of the CMA's regulation, which we hope will assist the investor present with us today. So our agenda for the day will consist of mainly seven components. Yasmine will start with an introduction to the regulations of the CMA, the objectives of the offer of securities regulation, its main components. I will then follow with a detailed explanation of the public offer of securities and an exempt offer of securities, as well as the process of the review that the FCU does. And then Yasmine will end the presentation with some highlights on the collective investment schemes regulation, which is still in draft mode, pending to be translated.
Hello, everyone. So I will introduce to you the regulations that the CMA has published on its website. And it is important to note that the CMA regulations were drafted with the assistance of the World Bank, just to make sure that they will reflect the business practices that are used around the world by various regulators. The CMA website, if you navigate on it, you will see that they reflect all of our regulations, the business conduct regulation, the market conduct regulation, a regulation on the offer of securities, which we will cover in the next slides, a regulation on the licensing and registration and on the listing rules, which is currently under draft, and at last the regulation on the collective investment schemes, also under draft. So first of all, what's the objective of the offer of security regulation? It is important to note that in Lebanon, only registered persons, those persons that have been approved by the CMA, can solicit investors. The registered person have to be working for an approved institution. An approved institution are those institutions that have been licensed by the CMA under the licensing and registration regulation to conduct securities business. The CMA does not commit on the merits on the product unless it considers that the proposed offer of security may not be in the public interest or may be in breach of the Law 161, which is the law that empowered the CMA to regulate the market, the financial market, or of the CMA regulations. Now, to go back to the offer of security regulation, what's the objective of it? So the main objective is to establish the requirement to make two types of offering in Lebanon, the public offer and the exempt offer. And any person that is soliciting an investor to market a product should be doing it in accordance with this regulation. What are the main components of the regulation? So we've been talking, first of all, of the offer and registered person approaching an investor, but what's an offer? Different definition for it. First of all, it could be making a security advertisement to issue a security. It could be issuing the securities and soliciting directly the investors, or inviting the investors to subscribe for security, so making the offer on behalf of an issuer. What is meant by the security advertisement? So it's any type of advertisement that is prepared and communicated in any form, verbal, electronic, written, to one or more persons in Lebanon. The security advertisement must contain certain criteria. For example, it has to identify who is the institution approaching the client. It has to have an information in a clear, fair way and should not be misleading to the investor. It should contain sufficient information that I will tackle a bit later in the next slide, so that the investor be able to make an informed decision. In case there is an extracted information from another source, state the source. And in case the advertisement include any like future forecast or indication of past performance, it is important to state that the past performance may not be necessarily a guide for the actual future performance, or that any forward-looking statement may be impacted by the market condition and affect the actual performance of the product. So I was telling you that the advertisement should capture necessary information. I'm going to give you a sample of those information so that you be aware what type of information is there. So in case the product is a guaranteed product, the ad should state that there is a guarantee and disclose the name of the guarantor, even if it's a third party. In case the offerer approaching the investors through the advertisement has a position in the security that are being offered, or, for example, conduct like any type of security business services, such as advising the issuer behind the security, it has to state it just to tackle any possible conflict of interest. The investor should know this. In case the product is denominated in another currency, for example, it should be stated that the FX might affect the value of the product. And as I said, if there is no guarantee, it should state just a warning, a statement that the fluctuation in the price may occur. And for those investors seeking, for example, income and not only capital appreciation, there should be a warning that the investor seeking income has to take advice from his professional financial advisor, just to make sure that it's suitable to him. There should be a statement in case the initial investment will be deducted by any charges, and in case the product is not liquid enough, there is no secondary market, just as a statement stating that it might not be easy to resell it before maturity or whatever the case is. So I've touched on the offer, but who's the market? So there are the offerers and the offerees. Who are the offerers? The offerers is either the issuer, so the one issuing the security, or the person acting as an agent for the issuer, so the approved institution license, if the issuer is not making the offer. As for the offeree could be any individual, company, or legal entity to whom the offerer will be offering the product, directly or through an agent. We will be talking about the public offer and the exempt offer, because the main component of the offer of security regulation is tackling two types, as I said earlier, the public and the exempt offer. Racha will detail about it later on, but just so you know, in a nutshell, before elaborating further, public offers mean those offers that is targeting the whole public. So the whole public could be retail investor or professional client. By professional clients, we mean those clients that are either companies that have been investing in financial instruments, that's the main purpose of it, or supranational governments, or funds, or individual or companies who fit those two criteria. They have 5 years of continuous experience in investing in markets and have a minimum net investable assets of $500,000 or the equivalent. So public offer tackles all those investors. But for the investors that are not categorized as professional, okay, there is a responsibility to conduct a suitability assessment when proposing a product to the client. So the licensed institution should assess whether it fits the criteria, the investment objective and profile of this client. Also, the language should be easy to understand, clear, consistent, and there should be a full disclosure of information. The public offer has to meet the requirement of this regulation, the offer of security regulation, and it requires the institution, before approaching a client, has to secure the CMA approval before selling the product. Okay? However, the exempt offer, the target market are mainly professional clients. We will expand further on it with Racha. Here, the suitability assessment that is required by the institution offering the product to the client is not a requirement. It's not a liability on the institution. In terms of documentation, it's less, it's briefer, and there are certain exemptions from if it was under a public offer. But it should also meet the requirements set under this regulation for the part applicable to the exempt offer, and notification should be submitted to the CMA, and then the institution receive an approval accordingly. So, as I said, we will elaborate further on the public, and then the exempt. Racha will take over.
Thank you, Yasmine. So, picking up from where Yasmine left us now with the slide, I will be discussing the two different types of offering of securities that are under the offer of securities regulation, which are the public and the exempt offer of securities. I'm going to start with the public offer of securities. So, as she said earlier, the public offer of securities is targeted mainly to retail investor and or professional clients. When the offeror applies its application to the CMA, it must include a draft of the prospectus. We will see in the next slide what should be included in that prospectus. And this prospectus should meet the requirements of the annexes under the offer of securities regulation. And it should include as well a declaration by the director of the issuer, as per the Annex 3 of the regulation. The offeror applying to the CMA must appoint an independent financial advisor unless this issuer is an approved institution. In that case, no need. And submit its application to the CMA to give us time 4 weeks to review the whole application before the proposed date of the offer. So the prospectus, what is the prospectus? It's a document that is binding between the issuer and the investor, and it should contain all the necessary information for that investor to make an informed investment decision. What is written inside of this prospectus, someone should be liable actually for what is written inside this prospectus, and this person should be the offeror, the issuer of the prospectus, the one who wrote the prospectus, and any expert who has an opinion stated inside that prospectus. And in that case, the expert is liable for the section of his opinion. The prospectus must not be published unless it has the CMA approval before. But in certain cases, we allow, the regulation allows for prospectuses to be, or offering documents to be handed out as draft and to take an indication of interest to test the market before applying for a full approval from the CMA. But in that case, it should be clearly stated that it is a draft, and there is a big CMA disclaimer that should be included in the document, and the approved institution is not allowed to take any orders or subscription, to make the client sign any kind of subscription document, or to arrange any money to be transferred in relation to that offering. When the CMA, and if the CMA gives its final approval, the final prospectus, which will include the whole amendments as per the CMA decision, should be made available as soon as the decision is taken, at least 2 days prior to the commencement of the offer. This prospectus should be given in both electronic and printed form, free of charge to the investor, and the offeror or the issuer should publish them on their website because it's for the public. When applying for a public offer, we require from the approved institution to provide us with 2 contact details for people we can ask questions to in the approved institution, and they can answer us to provide us more clarification. There is a checklist that should be provided as well, and this checklist is available under Annex 2 of the regulation, so they should provide us under each item which page covers this item. We also need a letter to be issued and signed by the issuer's financial advisor if the issuer is not an AI, and a declaration by the issuer's directors. In case the issuer is an approved institution is approved by the BDL, licensed by the BDL, we would need a copy of the BDL approval for the issuance of the securities. For specific cases. What should be included in the prospectus under a public offer? That's just a sample. The whole details are in the offer of securities regulation, but just to give you an idea, we have a CMA disclaimer that should be included in bold, and this disclaimer should state something along the lines of that the liability of the content of the prospectus lies with the issuer and the offerer, and other stuff as well that are covered in this disclaimer. It is important, as Yasmine said earlier, to know that the CMA's role is not to assess the merits of an investment. We are not here to say it's a good or bad idea to invest now in this product. We're just here to make sure that everything is clearly stated. There are no hidden sentences or ideas in the prospectus, and that the investor has all the information he needs to make his decision. It should also include a right of rescission, and that's in the case if the client sees that the final document that has been published is different, has material changes from the one that he already signed. He has the right to rescind its application. It should include also a clear summary of the offer for ease of reference, a risk section which should include all the risks associated with the offering, a fee section that is captured in one section, not in every corner of the prospectus. The terms and conditions of the offer, such as if there are protection, barriers, coupons, stuff like that, and the reason why they're doing the offering, so the use of proceeds, and the related parties to the offering to determine potential conflicts of interest. So that was for the public offer of securities. Now, for the exempt offer of securities, as Yasmine said, it has less requirements, but it still has requirements. So an exempt offer of securities is mainly addressed to professional clients. So in that case, as she said, no suitability requirement. And the application to the CMA should be made through the approved institution or by the issuer directly. In that case, they should notify the CMA of an exempt offer at least 14 days prior to the proposed date of offer and file all the documents that are under the Annex 5 of the regulation. An exempt offer application should also include a notice that should be signed by the two directors of the issuer. Some examples of exempt offers. The list is longer in the offer of securities, but that's just an idea. We have securities that are issued by the government of Lebanon or any other government or supranational authority. Both of these do not require CMA approval. The one that we receive the most as application is the third point, which are when an approved institution applies for private placements for 20 subscribers maximum, that is offered to 20 subscribers maximum, and all professional clients or counterparties with a minimum ticket of $10,000. Other types of exempt offers could be when a member of a corporate group offers its shares to another member, or stock bonuses, merger and acquisition. And the list, as I said, is more detailed in the offer of securities. Due to the fact that the market is volatile and sometimes institutions want to price a product quickly and not wait the whole process for the CMA approval, the offer of securities regulations gives them the chance and the possibility to get approval for series. So in that case, the approved institution applies for a series with certain fixed terms and variable terms. The fixed terms, and that's upon the board decision. The variable terms, as stated here, could vary from the price, any type of barrier or protection, the fees that are applied on the security, or who's the calculation agent. But the most important part is that a fixed parameter should be the issuer, because the language of the documentation from one issuer to another may differ and differs actually. So we cannot leave this as a variable. It needs to be reviewed by the CMA before it is granted approval. In case of private placements that are offered to a maximum of 20 subscribers, which are professional clients, and with a minimum ticket of $10,000. In that case, the approved institution must file a PPM with us. this PPM, although it is an exempt offer, it should include all the information that will help the investor make an informed decision and know about the issuer and its liabilities, its financial positions, and to know also all the terms and conditions of this offering. And very importantly, it must state that the offerer is also responsible for the content of the PPM and is liable if in any cases and there is a material information that is not inside this PPM or that has been or that is false or misleading for the investor. For a PPM or any other kind of document, a disclosure document under the exempt offer, it should include a summary of the offer, and that is the main, it's a sample, the whole list is in the offer of securities regulation. It should include a summary of the offer for ease of reference, as well as the CMA disclaimer that we already discussed. It should include information about the issuer, who is the issuer, and what's his financial situation, the characteristics of the product, who's the target market, and in that case, it is professional clients, but it should be clearly stated. The fee section also should be clearly stated in one section, and the risk also, they should include all the risks pertaining to this offer, and any potential conflict of interest, and how they might attend to it. When applying for an exempt offer, the approved institution should inform the CMA what type of offer, the exempt offer they are choosing from the list that we earlier saw. And we should know who's the approved institution who's making the offer, and give us an indication of the proposed opening and closing dates, how many shares or securities are to be issued, and any details on the terms and conditions of this offering that could help the CMA review the application, as well as the minimum subscription amount. As we said earlier, it should be $10,000, but it should be clearly stated in the document. The approved institution must also provide us with all the list of all the documents that will be provided to the investor and made available to the investor. There are two types that they will hand in and that is available to them to review. And we should review these documents. And a notice that a certificate that should be signed by two directors of the issuer. And this is just to certify that they're applying for an exempt offer, that they have reviewed this notice, and that they're aware that there is an exempt offer, and the authority is allowed to take any information it needs. So, in brief, just to make a quick comparison on between public and exempt offer. So, the public offer can be offered to retail and or professional clients, whereas exempt offers such as private placements are only addressed to professional clients or counterparties to a maximum of 20. Suitability assessment is required under the public offering for the retail client, not for the professional, but under the exempt offer, no suitability assessment is required by the approved institution. The disclosure requirements for the documents under a public offer are covered under the Annexes 2 and 3 of the regulation, and it's quite an important requirements, whereas for the exempt offer, it's less bulky, less information that is required to be added. But they both have in common that the liability of the document falls under the offerer of the issuer and the offerer of the document, and that any information that is included inside this documentation should be transparent, clear, and not misleading, even if it's an exempt offer. So what's the process of review of the FCU? So the approved institution applies its application to the CMA through the General Secretary, and they should submit all the documents that will be provided to the clients and the subscription form that will be signed by the client. So when the General Secretary receives this application, it will dispatch it to the concerned units in the CMA. So in that case, if and once we receive the application as FCU, we will carry out any inquiries that we need to make an informed decision or recommendation, to the board, and review the document. And we are allowed, and we will have to ask additional information from the approved institution before we make our recommendation to the board. Once we have enough elements to make our recommendation to the board, we will submit it to the board, who will make an independent decision, which will be communicated to the approved institution through our General Secretary. Important to note that if the CMA considers that the proposed offer is not in the public interest or may result in the breach of the law 161 or the CMA regulations, it may refuse to approve a prospectus and prohibit or delay the offer of the securities involved. Thank you. And now Yasmine will give you just a highlight on the collective investment schemes regulation.
Okay. So, as stated earlier, the CIS regulation, which is a regulation that governs the marketing of funds, is under draft and reflected in our website already. It is approved by our board, but it just needs to get into final translation into Arabic. Meanwhile, the CMA decision number 14 has been currently governing the marketing of the mutual funds. And in order to accommodate certain demands that we receive from the institution, we have reviewed a recent application under the upcoming new regulation, just to be able to apply certain exemptions covered in this regulation. What's the objective of this fund regulation? It is to regulate the establishment, the management, and the offering. So it covers all of the three of any fund sold in Lebanon. It also set the framework and the requirements to be followed by the managers of the fund, the custodian of the fund, and the institution approaching the investor. So any person that is offering a fund in Lebanon must abide by this regulation and license under the licensing and registration regulation that is on our website as well. A fund, whether it's a collective investment scheme, local or foreign, must be offered in Lebanon and operated in a way that it is meeting the requirements of the law 161, the law 706, which is the law that governs the establishment and marketing of funds in Lebanon, more particularly the local funds in Lebanon, but under it, there is a provision that for foreign funds, it also needs to secure the approval of the authority in Lebanon and the CIS regulation. So an institution that wish to offer units in a fund, how do they apply to the CMA? There is a checklist that is covered in the annexes of the CIS regulation. It's called application form. It needs to submit it along with the offering documents, which mainly includes the prospectus of the fund. So the prospectus is this document that will include all the information needed so that the investor be able to make an informed decision on the investment. Okay, it is important to note that there are certain investors that are classified by their institution as execution-only accounts and other under advisory accounts. So the suitability requirements under the execution account is it doesn't need to be met. Same applies for any professional client. Through time, if the fund prospectus is amended, a copy of the revised document or any addendum has to be filed with the CMA. So basically, what does the prospectus include? First of all, it's dated, and it captures as a sample the following information. So it gives a presentation about the fund. So how is it established under a company, a mutual fund? What's the objective, the strategy? It also describes the manager, who's the management company, the directors, what are their responsibility, and in case they delegate certain activity to another party, who remains responsible, and how does the investor subscribe, what are the criteria for redemption, what's the process to follow. Also, it has to indicate how the value of the units held in this fund how this value is calculated, the method is used, and how often will it be calculated. There should be a section disclosing all the risk, all the fees, and there is a CMA disclaimer that has to be also reflected. along the lines that the CMA is not responsible for the content and is not responsible for the suitability assessment as well. Mainly, the type of funds that we've been reviewing and receiving as an application are the open-ended and closed-ended. Now, I told you earlier that up till now, the CMA decision number 14 was governing the offering of funds in Lebanon, but this decision does not differentiate between exempt offer or public offer. So it's all the same. However, under the new regulation, we clearly separate between the public offer, the exempt offer. And an example, as an example, for you to understand better, if you take, for example, the requirements of borrowing. So under a public offer, so the offer that goes to the whole public, there is a restriction regarding how much the manager of the fund can borrow. So basically, he cannot borrow more than 10% of the value of the fund and up to a temporary period, 80 days, in case there are redemptions that should be met. So in case investor wants to redeem. And for the closed-ended scheme, the borrowing can not exceed more than 20% of the value of the fund. However, no restriction on the time, on the duration, but there is a disclosure requirement. So it should state what's the duration, why are they borrowing, and there should be a full disclosure about it. And for those closed-ended scheme investing in real estate, because the real estate, if a fund invests in real estate under this regulation, it should be under the closed-ended scheme. So for those fees, not more than 60% of any piece of real estate has to be secured by mortgage. However, under the exempt offer, there is an unlimited use of borrowing or leverage. There is just a requirement to disclose what's the nature, what's the purpose of it, the duration. So this is as an example, but also if we look at the investment exposure of a fund, there are limitations and restrictions under the public offer that are not applicable under the exempt offer. So when we review the application, the financial control unit, when it receives the application, it will carry its review. It may inquire on any information that needs to be validated, certified, and we propose certain recommendations to the institution. We don't build a final decision. After we complete our review, we reflect our analysis, the result of our review, we reflect them to our board of directors, and they will take a final decision that will be communicated to the institutions through our general secretariat. So basically, they will either approve the marketing of the fund or refuse the application, or they can approve, but under certain conditions to be followed. After this, what's happening is that we will reflect those funds that have been approved or under conditional approval on our website. So there is a list of funds, and there will be a note in case the fund are subject to certain conditions. And in this case, the institution are urged to seek for those conditions, and they have to contact our General Secretariat to make sure that the documents have been amended to reflect those conditions, or they have to reflect them as offerer. So that's it, basically, regarding the highlights on the fund regulation. Any questions?
Regarding the exempt offer and the public offer, you are practically, even for the exempt offers, at the end, you are getting the approval of the CMA. So practically the difference between the two types, the mechanism in both cases is quite similar. What's practically the difference between both if at the end you are getting the approval of the CMA for exempt offers?
Okay. First of all, as Racha has stated earlier, in terms of requirements, there are fewer requirements and certain exemptions that the offer cannot abide by.
So it's a question of less documentation.
Not only, but also in terms of time review. So basically, an exempt offer can be submitted to the CMA at least 14 days prior to the offer. And if the institution didn't hear from the CMA after those 14 days, it can go ahead and market the product. So also there are cases that happen with us on a case by case actually. If we have reviewed and engaged an institution to abide by certain requirements, and they have fulfilled them, and there is no more requirements needed to be met, and the board will meet after the 14 days. If the institution requires it, we can, on a case-by-case, expedite the approval process by engaging our chairman, who will consult with the board and take the final decision ahead of time.
In case of an approved
If it's
exempt scheme.
if there is nothing required anymore from the institution.
But in the regulation, it is said that if a period of 14 days expires, okay, we don't need to have a decision from the board whatsoever. We just we are able to promote the fund.
No, it's actually if the authority doesn't engage anyone, you don't hear from the authority within 14 days, then in that case you may go and proceed with the offering. But if we start engaging with the approved institution, then in that case the process has started and it's within the 14 days. And as she said, if after these 14 days, while we are reviewing, we have all the information to make a recommendation to the board and the institution is in a hurry, then in that case, on a case-by-case basis, we might be able to expedite the process by doing what she said.
Okay, so this is on the ground, what's happening on the ground.
Yes.
However, in the text of the regulation, it talks only about notification. Okay. So maybe there is a difference between the practice and what is
true. But under the notification, there is also a statement that states, in case the CMA needs to inquire on any information, validate any information, it has the right to engage the institution. So this, according to the response received, will delay the 14 days because you have heard from us. And as such, you need to know, is it okay? We applied your recommendation. So for you to know how to go ahead, there will be an approval that is communicated by our General Secretariat. So this is the approval.
In the same spirit of the questions, is there any guiding booklet or anything that details the requirements that need to be in the prospectus, especially for exempt offers, for institutions to follow? Because, as you say, we submit for exempt offer within 14 days. Usually we hear back from you, and then it takes longer than expected. Sometimes the project needs to be implemented and we're still waiting from a sort of approval or consent from the CMA to proceed, whereas we still get information or we're still in communication with you to amend certain points in the prospectus. So maybe if you give us some guidelines of how it should be, that would be more detailed than the regulation, we would have faster approval, and then we would abide better, and then we don't face delays.
Okay. Basically, in the regulation, there are the annexes that really detail in depth what should be included under a prospectus for a public offer or prospectus, a private offer, a PPM, an offering circular for private placement, even for the term sheet for the structured product, and it covers also bonds, equities. And we ask from the institution through this regulation to provide us with just a checklist stating where this information required in detail in the regulation is stated. And we are happy to have this presentation so that the institution are aware of it, so that when they apply, we don't need to lose time on fulfilling the requirements on the regulation, so that the application we receive already, as much as it can,
I mean, we already do this, and we follow point by point, and we state every point clear, in which page, and still the PPM might take 2 months with the CMA back and forth in order to amend and adjust. And sometimes we don't have this luxury of time to wait 2 months.
but for the rest-
It's an exempt offer.
For the rest, it might not only be in terms of what should be inside the PPM, it can be clarifications that we need for us to be able to review. So this time is not only because the PPM is not complete, it might be a clarification. Sometimes statements are not very clear or they can be misleading to the investor. And on these points, we comment, and that's why the process might take more time.
Allow me to add that sometimes we have inquired on certain information from the institution, but the institution wasn't responding, and we put a deadline in order to organize ourselves and expedite the process. Sometimes the institution was just asking for a delay in answering us. So in this case, we already did it. We issued our recommendation to the board before waiting, after the deadline given, before waiting for this response that we still didn't, we back then did not receive. And at that time, we issued our recommendation to the board, and we, for example, approved, but under certain conditions. So it's easier for the institution to receive this approval under a certain condition, and then you take the time to meet those conditions.
Sorry, so in general, an application that is complete in terms of the requirements of the annexes, and that has information that is clearly stated, because sometimes, we receive applications where inside the prospectus there is a miscalculation, or there is a table that is not really clear for the investor, or the amounts are not correct. We review all of that. So if the application has everything cleared and everything is done in a proper manner, the process can be very quick. But it takes time when we have these things we need to review.
And we gave approval on case by case ahead of the next board meeting by consulting our chairman, especially in those cases where it's securities issued by institution or banks that affect their capital requirements. So we look at it as a priority, such as preferred shares or bonds.
Any other question?
Okay.
Thank you.
Thank you.